Susan Powers. I'm a partner at AssetGrade. We're registered investment advisors. We have offices in Atlanta, Boston, and Chicago. So when you think about IRA contributions, and actually even 401k contributions, there are actually two ways to look at that. The traditional or tax deductible way, a traditional IRA contribution, means that you get that tax deduction up front, and at the end, you will actually pay taxes on the money as you take it out later in retirement. With a Roth contribution, a 401k or a Roth IRA, you put the money in, but you forego a tax deduction today, but later on in retirement, when you take the money out, it's tax-free. Both options can be really attractive, and that's one of the things at AssetGrade that we explore with our clients. As we put together a holistic financial plan, you want to take advantage of potentially both of those options, and we want to explore how those can benefit you. You know, oftentimes, we've been talking about IRA contributions. Oftentimes you already have money in another savings account, and you're not thinking about the fact that if I were to take some of that money and contribute to an IRA, I could create a tax deduction for myself, and that might be just the right thing for you to do. Some people may not realize there have been a lot of changes with the recent Tax Reform Act. A lot of deductions have been taken away. You no longer get a personal exemption. A lot of people won't be able to itemize deductions any longer because the limit has gone up so dramatically. And so this might be the perfect year to say, I could really use every single tax deduction I can find. The other thing is we just talked about the fact that maybe a Roth would be the right way for you to go. And by moving that from a taxable savings account to a Roth IRA, now you're going to take all of that investment earnings and you're going to turn it into tax-free income for you. So there are lots of opportunities that you want to explore as your savings continue to grow and become more complex. You know, another consideration is for people that are self-employed. You've got these operating accounts for your business, you're getting close to year end, and you've got all of this money sitting in some of those operating accounts. And you've probably become more profitable over the years, but maybe you haven't been thinking about retirement accounts. If you set up a retirement plan, which would be very important for your overall financial plan as well, then you could take this money and you can shift it from bucket A, your operating account, into bucket B, which is now your new retirement plan that you've established for yourself. And you can create a tax deduction by shifting money between those buckets. And importantly, you've started to really save for yourself for retirement and created part of your own long-term financial plan, which is very important. So when do you need to make a deposit if you're going to take advantage of a tax deduction, as we've been talking about? And really, you have a lot of flexibility there as well. Contributions don't need to be made into these IRAs until the due date of your tax return, and you can also extend your tax return and take advantage of that as well. So depending on if you're a business or if you're an individual, you may have as long as October 15th of the following year to actually make that deposit and still take advantage of the deduction. So what do you need to do now? Well, first, don't be overwhelmed. That's what we're here to do. We're here to help. So give us a call and we'll help walk you through the process. If you are an employer and you feel like it's time to start a retirement plan for yourself, depending on the type of plan, you may need to have that set up by the end of the year, and we can walk through that and determine if that's the case. If you have employees in particular and you're thinking about maybe along the lines of a 401k plan, you'll definitely need to have that put in place by the end of the year, but again, we can evaluate that. If you think personally it's time for you to get that holistic financial plan pulled together, again, don't be daunted by the fact that I've got to gather all this information. We can walk through it step by step. It's not going to be overwhelming. And again, you don't have to boil the whole ocean at one time. We'll do it piece by piece. That's what we're going to be here for. And we can show you how it works along the way. But give us a call and let's just get started. Don't wait till everything needs to be done. Let's just get started.